Feds have just cut rates today, and I'm back. I haven't been around in a while. So I'm Camari Ellis. Welcome to the Finance Rebel Show. Y'all know every Wednesday we go live and we talk about money issues. So today I wanted to talk about the Fed. Got to talk about the Fed and also what's going on. And I got a couple of stories I wanted to share. One about how couples manage money. It was a very interesting thing that I wanted to go through with you all. But again, I'm Camari Ellis. Y'all probably don't remember me because I ain't been around for a while, but I promise to be back every week. All right, every week, Wednesday, 8 p.m. So guess what? Fed Reserve cut rates today. And I wanted to talk about that because that's going to impact everything. Everything. And honestly, I don't think it's a good thing. But I know a lot of people are happy. Mortgage rates are going to go down. That's going to give some relief on a lot of things. And we'll break down all that stuff and what Fed rate or the Fed rate cut is going to impact the most. All right, so let's get into it and let's break it all down. All right, so I wanted to take a look at the Fed Reserve. This is Jerome Powell. This is the chair of the Fed Reserve. And this is the guy who's the big boss over there. And every time there's a major announcement, he talks about it.
Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%.
Now, that's a whole lot, right? He said a whole lot there. Just to try to break it down, inflation has been running rampant, and we all know that.
Happy birthday,
I'm sure
Marty.
you all have seen
no,
that
you don't.
with all the political ads that we all are suffering through. I know I'm not the only one who's tired of all these ads, all the text messages, all the emails that everybody gets during campaign season, especially during the presidential election. But the Fed's mandate is to kind of manage the economy, to make sure that the economy is not too hot, not too cold, right? And so inflation had been a problem. Inflation had been a problem since COVID. So don't let the politicians fool you that it wasn't really about an administration for the most part. It was really about what's been going on around the world. I mean, I know you all, I know I have. Food costs has been crazy. Chicken prices have been up. I was talking to a friend of mine yesterday about tuna prices. They were telling me like tuna is like $4.99 a can. And we were like, damn, wasn't tuna like 99 cents a can not too long ago? And, you know, we were talking about how tuna usually was 10 for 10, right? $10 for 10 cans, 5 for 5, $5 for 10 cans. And now it's a whopping $4.99 a can. So we have seen a lot of things go crazy, but inflation rates have dropped down a little bit. Employment has been kind of steady. And so that has given the Fed confidence that it's a good thing to reduce rates, because what they don't want to do is they don't want to keep rates high and stagger the U.S. economy unjustly so. Me personally, though, I think that they shouldn't change Fed rates. I feel that there's too much interference in the markets, monkeying around in the markets. And when you do that, it causes all kind of havoc. Now, I haven't done a whole lot of research on this point I'm about to mention, but I feel, and I'm going to back this up, and I've mentioned this before, but I feel this low interest rate environment that we've had in the United States for quite some time is really, really detrimental for low income people, middle income and low income people. Camari, why do you say that? I say that because what's going on? When you have lower interest rates, people are able to borrow a lot easier. We're not talking about your average everyday people. We're talking about corporations. Corporations are able to borrow a lot easier. And when you look around and you see what's going on in the country and you see all these corporations buying up Atlanta, I've seen there's a town in Tennessee. Again, major corporate buying of residential homes. And they're buying all these residential homes to then rent them out. Well, guess what? Low to zero interest rate environments make it easier for corporations to borrow money. They take that money and they say, oh, what am I going to do with all this easy money? Do I put it in the stock market or should I put it in the real estate market? What's the most underpriced? Where can I get the most bang for my buck? And a lot of times it's been in real estate because they've got big cash amounts. They can go on and say, all right, I want to buy all these residential properties and then turn and rent them out and really kind of corner the market. So when you look at a thing called the G word, gentrification, gentrification is being fueled, my feelings, by much of this low interest rate. And I'm gonna go and do some research and talk about that, just so it's not just me bumping on the gums. I want to bring some data to this. And I haven't done it yet, but I feel like you see all these developers, they're moving into low income places. They're moving people out of these places. It's not a good thing. And stuff like this happens every time the Fed monkeys around with interest rates. That's just my feelings. I don't know. What do y'all think? Do y'all think the Fed raising rates is good? Or is the Fed leaving rates the same was fine? I think it would have been fine. Again, people are complaining because they want to see, more activity in the housing market and the real estate market. But here's the other thing that's going to happen. Now that interest rates have dropped, we're going to see home pricing go up. Why? Supply and demand. It's basic economics, right? People are going to be able to borrow at a cheaper level. They can afford bigger homes. Everybody loves the McMansions, and then they'll be able to take those McMansions or buy those McMansions or buy a bigger home than what they actually really should get. But I think it's bad because a lot of times it's gluttony, it's greed from a lot of people when they buy these homes. So I do not personally think it's a good thing that the Fed cut rates, but we're going to see. We're going to see. But now, guys, I haven't really been around. I know I did a broadcast last night talking about taxes, but I haven't done a broadcast, for the Finance Rebel Show for a while. So I want to know, how's everybody doing? Feel free to chime in. Let me know where you're hailing from. Let me know if you have any questions. Again, the Finance Rebel Show is to help people have a better understanding on financial issues so you can take these topics and these things and apply them to your everyday life, to your everyday money life. So I don't want to just sit on here and bloviate and talk about a whole bunch of stuff, right? That really doesn't matter. That doesn't impact you. But interest rates are going to impact you. The Fed rate is going to impact everything. Namely, credit cards. Credit cards rates are pegged off the Fed. Mortgage rates are pegged off the Fed. We're going to see savings rates like everybody has been talking about. Everybody should get a high yield savings account. Well, we'll probably see some of these high yield savings account rates begin to fall because of the Fed funds rate cut, right? We're going to see a lot of those things come down, right? Bond yields. I know nobody really thinks about bond yields that much. They're going to be impacted. We'll probably see the stock market bounce tomorrow throughout the week. So all of these things are going to be impacted by the Fed Reserve, right? So just keep an eye out on it. Keep an eye out on it and make sure you're monitoring your money. Make sure you're monitoring your money. Now, there was an article that I saw and I thought it was really interesting, and I wanted to talk to you all about it. It's about a couple who, one couple owns a home, one couple sold a home, and they were supposed to kind of split the bill on some things. And that's not what happened. But I want to share this story with you all, and I want to get your take on it. So we got somebody in the house. Lisa, it's nice to see you live. I'm right outside of Atlanta. Okay, welcome to the live. Right, I see the big four buying everything here. Yes, they are. Yes, they are. Now I want to talk about another housing story. Right, so this housing story again, it's kind of weird, but not weird because stuff like this happens all of the time. All right, so I want to share this here. Give me 1 second. When I go to share this, here we go. There we go. I'm a little rusty, y'all. I'm a little rusty. So I hope everybody can see this. Headline. This is from Market Watch. I made a very stupid mistake. I spent $50,000 renovating my fiance's kitchen. Now he's reneging on a promise where I buy 50% of his home. Now I know everybody wants to talk about man pay for this, woman pay for this, going 50-50 on all these relationship podcasts. By the way, they're all trash for the most part. Largely so. I hate them all because none of them are real life. However, I see stuff like this happen all the time. You know, when I talk about the relationship podcasts are trash, I say that because I feel like a lot of these things are exaggerated, just to get clicks and likes. They're not real life, real scenarios. They're just talking trash. They're just being sensational just to, get people to click on their stuff, get people to share their stuff, to make money off of this on social media, right? Now, going back to this article, so it says, my house sold for $337,000. Within 1 day, it was mortgage free. Well, this lady might have a tax problem, but that's not what we're talking about. Now, when we look at this, I'm going to read through this as much as possible without boring you guys, all right? Now, you see this lady here. They're quitting. I'm a 57-year-old woman. Red flag right there. 57-year-old woman investing in selling her home to then renovate this other guy's home that she's shacking up with. All right, so I'm a 57-year-old widow, still working full-time, making $85,000 a year. I am financially solvent with decent retirement savings and some inheritance from my late husband. So she took her late husband's money she took her late husband's money to then to refurbish this other guy's house that she's now dating. All right. That I hope the husband's not rolling over his grave on this one. I will be okay no matter what happens, but I think I made a very stupid mistake. What do y'all think? Y'all think this is stupid just by reading this? without hearing too much more? Do y'all think this is stupid? Do you think this was wise? What do you think? Let's get back to it. All right. Nearly 4 years ago, I began dating a wonderful man. We fell deeply in love and seemed so compatible. We became engaged in February, and the plan was I would sell my house and move into his house, which it sits adjacent to a family farm. Okay, now this is getting deep. My house sold for $337,000 within one day, and it was mortgage free. Our agreement was that his house was likely worth $400,000. Includes a 2 acre yard, but excluding all the farmland. I would buy 50% for $200,000, and he would add my name to the deed. Dun 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 dun. This sounds interesting. I moved into his home in April and probably spent $50,000 on a beautiful kitchen renovation, along with some other more minor things like new flooring, lighting, and paint that have already increased the value of the home. Waffling on adding the name to the deed. Okay, so lady spends the money, she invests the money, dude's starting to flake. Now, this is only her side of the story, right? I believe there are three sides to the story. There's his side, her side, and the true side, or the truth. All right, the remaining $150,000 is in a joint held checking account. It's in a joint held account. That's interesting. That's interesting. Account so he can have access to it. We set a wedding date for October 2025. However, as perfect as it sounds, he seems to be waffling on adding my name to the deed. My fiance insists that he hasn't changed his mind, but his kids want him to wait until we marry. So there's outside pressure. My reply to that was that it was fine as long as he doesn't expect access to my sale proceeds until that time as well. The big issue. I wish I hadn't spent that $50,000. But what about the $50,000 I have already spent? What if he passes away in the next year? Not likely, as he is 63. Listen, everything since COVID, the world has been upside down. I have seen a whole lot of deaths of younger folks, younger than 50, younger than 40. So I wouldn't just say, since somebody's 63 and they're healthy, that they may not succumb to life or death, you know. All right, still anything can happen. His adult kids would get this house. The money I invested in the kitchen and possibly even the furnishings. I don't want to lose my home and have to move again at this age. I truly did intend this to be a permanent move. Obviously, adding my name to this deed as a joint tenant with the rights of survivorships. Now, for all of you who are familiar with real estate, joint tenants with rights of survivorship means when somebody passes away, the other person that's on a deed gets full ownership. They get 100% of ownership. All right. Now, let's see. All right. I don't want to lose. I lost it. But I'm just worried about what will happen until that time. Do I have any rights? In love, but concerned. I mean, I think she has a valid complaint. The children are getting involved in this scenario, and it's sad. It's really, really sad, in my opinion. But there's a couple ways to tackle this, in my opinion. Number one, I don't know what the guy's telling his children. I don't know why the children had so much say in what's going on with this. But out the gate, Finance 101, I would say, is this in writing. Now, I'm not a lawyer. I'm not going to act like I'm one on social media, but I've been through a couple of cases. So what I'll say is that she does have a claim because she spent the $50,000. So she could sue him if she wants to. Now, we all know that's probably not going to happen because they're in love and she wants her money. Now, again, she should have put it in writing. He should have insisted that they put it in writing. Anytime when you're working together, right, in marriage, in love, you must make sure both parties are protected. Like your job, I don't care, man or woman, you're supposed to make sure, these are my opinions, y'all. You are supposed to make sure your person is covered. Your job is to protect them, whether that's from reneging on a deal, if that is making sure that they have their finances in order, in terms of paperwork and all of that. You have to insist upon some things. Now, I know it may be a little bit more arduous. It may take a little bit more time. It may be a bit more inconvenient. It may be a nuisance. It might be a flat out pain in the ass. But guess what? You must always move in the best benefit of your loved one. This is the person that you're walking throughout life with. And all of these things are supposed to be agreed upon before you get into it. Now, the children getting involved in it, I mean, I don't think they have any standing. In my opinion, they don't. Now, here's something else they could have done. She doesn't have her name on the deed. She's wondering what's going to happen if, God forbid, he passes away. She's left homeless. The kids will probably kick her out because they take up ownership of the home. They're going to move her out. Well, you've seen that, or I've seen those stories a lot. One thing that could be done to protect their $50,000 investment, they can take out a life insurance policy. Yes, it's going to cost some money, but would you rather risk $50,000, or would you rather pay a couple $1,000s for the premium on this life insurance policy, just to make sure everybody is protected, everybody is whole? I'm guessing this is the home the kids were raised in. Pop, boyfriend, fiance, soon to be husband wants to make sure his children are good. They get the legacy. I get that, right? However, girlfriend, fiance, she's moved in. She's committed her life. She's committed her money. She wants to make sure that her return on investment is good. And she's still working, right? And the other thing that I found interesting is that they put the money in a joint account. So they're acting like they're married. I mean, for all intents and purposes, right? I always get caught up when I say that word, but they're acting like they're married. They're sharing everything. However, they're not sharing everything because they're not sharing the home, or they're not covering it. And it doesn't sound like there's a will. So if this were my client, I would say, one, boom, let's get life insurance. Let's get life insurance for the $50,000 to make sure. Actually, I would do more, but $50,000 at bare minimum to make sure that you're covered and you don't lose that, right? Because you're going to need it. You're getting into retirement years. You can't be trying to figure out where you're going to live, right? As you get older, you don't want money to be an issue as you get older. You're tired, as you get older. I know as I get older, I'm a lot more tired, right? So I don't want to do a whole lot of things. Also, we don't know how much longer she's going to be working. She's 57. So a lot of people start to retire at 59, 62, 66. I'm guessing her full retirement age is like 67, right? Meaning that when she can get her full Social Security benefits, assuming that she qualifies for Social Security benefits. Everybody does not qualify for Social Security benefits. Now, she said she's a widower. Her husband, I don't know if her husband was self-employed. I don't know the deal. But hopefully between the two of them, they have enough quarters in Social Security that she gets some kind of benefit at retirement age. All right. But again, I would say can't cry over spilled milk. Y'all getting married very soon. Let's get some life insurance. Let's draft a document and say this is what we want to happen. And guess what? Let's get a lawyer involved to draft the document. I mean, you can use some of these other services, but I would pay a lawyer, or at least, what I would do is I might draft a document. I might use one of these services. I'm not going to use any names because they don't pay for advertisement. And then I would draft it and then take it to a lawyer to review it. A lawyer is going to be involved in the process, though, some way, somehow, right? And then from there, I would say, all right, well, listen, if you don't want to put me on this deed because of your kids, I get it, but I need certain protections. You can't just leave me ass out because your kids want the home or want us to wait. Your kids wasn't there when they tell me to not do the kitchen before we got married, right? So that's a little unfair. And it's a little unfair, it's a lot unfair actually, to say, hey, let's now put the brakes on this and not make me financially whole because the kids want to wait, right? You should have kind of thought of that beforehand, before y'all did all that, all right? But again, I find it very, very, very interesting. I see a lot of people get into these pickles, right? Because life is changing. Relationships are changing. People are not just staying married to a person forever, or people are dying earlier and then they're looking to restart their life with their new partner, with their new love. And then these things will arise. And so then you have to have ways to work through all these things. All right. But, I get why she has a problem, because the man is going back on his words because of his kids. And to me, that's not fair. That's not right. Now, I'm sure somebody's going to say, I'm caping for the ladies. No, I would say the same thing if it was a woman and the roles were reversed, right? You gave your word. This is what we agreed upon from the start. Now you want to change. That ain't right. That ain't fair. So, but what do y'all think? Do you think this is right? Do you think the man waffling on putting her name on the deed is fair? What would you do in this scenario? But one, would you even be in this scenario? But what would you do in this scenario if this were you? I am interested in all of your thoughts. Make sure you put them in the comments. All right. Again, I'm Camari Ellis. This is the Finance Rebel Show. I'm going to be here every Wednesday going forward, and probably some more times in between. But if you find any other interesting things for me to talk about, or you want me to talk about, feel free to shoot me a DM over on the Instagrams, or you can shoot me an email. I said an email on Instagram. Shoot me a DM on the Instagrams and feel free to shoot me an email. Let me see, which email do we want to use? Again, I am out of all my stuff is discombobulated. Let's see. Well, y'all know where to find me. If you have any other questions about money, taxes, any other things, feel free to hit me up. Again, I'm Camari Ellis, the Finance Rebel. Thank you all for watching, and I'll talk to you all soon. Have a great night.